The stock market's actually having a pretty good week. Stocks are popping up, and everyone is still asking themselves the same question. Is now the time to buy as stocks roar up, or are we just in the midst of a much larger sell-off? In this video, we're going to be answering that question with some very interesting and pretty reliable data that has perfectly called at least the previous stock market bottom. Now, it always seems like insiders and members of Congress have such great trading history. Whether we're looking at the trading history of Nancy Pelosi or other insiders, they tend to do pretty dang good. So we're going to be utilizing that data today to our advantage and seeing what moves they're making now and how they're reacting to this market. So I came across some data today from WashingtonService.com that basically shows the insider trading activity. We can see this red line right here is spiking up pretty much as high as it's been since the low of the pandemic in 2020. We can see when the stock market crashed in 2020, the number of insiders buying stocks relative to the number of insiders selling stocks absolutely skyrocketed. And that's what we're seeing in this market too. While everyone else is panicking and you see news articles, saying, oh, this expert warns of a disastrous stock market crash, trying to scare you and get you to sell out, insiders, the people who are actually running these giant companies, are buying up their stocks more now than they have over the past 2 years. So you have to understand how the game is being played. While you see news articles that seem scary, the people who are running these companies are buying the stock. Check this out. Like I said, insiders are buying more of their own stock right now than they have since March 2020. That's a big sign. I also wanted to showcase how, this article right here, this screenshot right here, shows the S&P 500 corporate insider selling and how it's extremely low right now. So this is not insider buying, this is insider selling. Basically, when we see this low, it means insiders are not really selling their stocks, and they're not right now. Insiders were basically every time insiders stop selling their stocks, a lot of times it leads to a bottom, and we can see this pretty consistently with the low in 2011, the low in 2012, the low in 2016, the low in 2019, and what we're seeing right now. So these insiders generally have a pretty good track record, and it's kind of obvious because they have access to more information than the general public and even some institutional traders. The insiders at these companies are running these companies, obviously, and they know how they're doing. I doubt if, the insiders at a lot of these S&P 500 companies were seeing terrible earnings and, some bad signals. I doubt they'd be buying their stock, or at least stop selling their stock. So that was interesting. Another pretty interesting thing that I wanted to point out is that not only are insiders buying more shares of their stocks right now, but we're also seeing very, very high stock buybacks in the market. Check out this article from Bloomberg. It says American companies have announced plans to purchase 666, that's kind of a weird number for this article, but $666 billion of their own shares since January, which is 19% above the intended total at this time last year. So basically, companies are buying back more of their stock than they were even expected to, which also puts even more buying pressure into the market. But what's more important than anything else is the upcoming earnings season. The upcoming earnings season is going to show us how these companies are reacting to this record inflation. If we have companies that are taking a beating from inflation and earnings drop, that will be bad for multiple reasons, but it's also interesting and notable to point out that the S&P 500's PE ratio right now fell by quite a bit from a couple months ago. We can see it was at 40 just a couple months ago, or around around like a year ago or so, and it has dropped all the way down to 24. All right, that's a big drop, 40 to 24. So if we see these S&P 500 companies report strong earnings this quarter, that will lower this ratio, assuming the price stays the same. Because think about it, if you have earnings increase, that will make the PE ratio as a whole decrease, assuming the price stays the same. So that will be very good. And then on top of that, if we see good earnings, you would think logically there wouldn't be any like mass layoffs or anything like that, but we'll see. But all in all, the important thing to take away is that historically, when insiders stop selling and start buying their stocks, it has been good buying points, and that's what we're seeing now. One of the most notable insider trades that I've seen lately is actually with Starbucks. Howard Schultz, which is currently the CEO of Starbucks, dumped around $15 million into Starbucks shares around $70 or so. Right now, Starbucks is right around 73. It's not at a bad level. They pay a decent dividend. Starbucks is a powerhouse, as we all know. But it's like, hey, insiders are buying the dip. So no one knows exactly what's going to happen, especially just in terms of recession and everything like that. But there have been some pretty good signs lately. And of course, there have been some scary signs too. But I will continue to dollar cost average. We're always going to hear articles on how, the world is headed for a global recession that we will never recover from, and how this time it's different, and a bunch of articles like that. But you have to keep in mind, when you see the crowd and you see everyone else freaking out about the stock market and saying it's going to crash, those have always been the greatest buying opportunities. In March, April, and May of 2020, everyone was saying the stock market was going to, do a double dip crash and it was going to fall lower. Everyone was panicking, right? That was an amazing buying opportunity. You could say the same thing in 2018 when everyone was freaking out. You could say the same thing in any and every other crash. When the crowd is freaking out, that's the buying opportunity. And we're seeing a lot of freaking out right now, and we're seeing the smart money, like the insiders, buying the dip. So I think this data is pretty interesting. A lot of research goes into these videos, so if you like it, make sure to subscribe. We have a bunch more awesome videos like these coming in the future, so subscribe if you're new. Also join that StockedUp Discord. It's going to be that first link in the description and the comments down below. It's completely free. You can chat with me all day, Tom, and a bunch of other great people. Join up, it's free, and let's have a great week.